got Dhananjay Sinha of IDFC Securities. He's joining us right now on the phone line. Dhananjay, thanks very much for taking out the time. Market mood not so great. Last few days have been extremely volatile with regards to the market on the downside and the sellers getting extremely active. What's your case in terms of the approach one should take now?
So I think we have actually been overweight on the consumer space, and so that has actually been doing well. So if you look at even in the choppy market that we have seen over the last couple of days, I think the FMCG stocks have actually, many of them have actually done well, and a lot of them are at all-time high. So year to date, they have actually outperformed. So I think what essentially is was a fundamental view from my side that there will be a sort of resilience as far as volume growth is concerned, is turning out also to be an area where people are sort of hiding when the rest of the market is actually very volatile, and there is a lack of certainty. So that's one thing that I would sort of recommend, and increasingly I would say that as more fundamental view pans out over the next 6 months in terms of demand traction, one should get into consumer discretionary as well. So, especially the small ticket items, given the context that government has started to spend and the cash flow issues are getting addressed at the margin at this juncture. So that is another thing that we have said. The second piece of our view has been that we have to be overweight on the IT space, wherein if there is a sort of a depreciation in currency, I think that's another area where there can be traction. And if global sort of trade conflict starts to dissipate, the concern on the IT space will sort of also fade out. So I think that's the second bit. Third bit, what we are saying is that the index is likely to be under pressure, largely given the context that there are concerns on the banking sector, especially in the context of fears of gross NPA rising again in the context of lower credit growth for the banking sector and the cash crunch that has happened in the past. So I think the next couple of quarters, I think that should continue to bother the market. Within that, I would say that we are expecting the margin pressure to pan out in the banking sector, especially when there is a benchmarking to the lending rate, to the repo rate that has to happen. So that kind of a context is a sort of a negative for the banking sector, and I think it will pan out over the next couple of quarters. So I think in the banking stock, one has to be very selective. Look at banks that have a good, a reasonably large portion of floating rate loans, so that they can be repriced, and the margin pressure is sort of is minimal. So those are the stocks one should have. I think within that, I think HDFC Bank has a good proportion of floating rate loans. So this is what we are proposing. I think in the second half things should look better, right. And one has to really look at value picks from a 1 or 2 year standpoint.
Right.
I think there will be good opportunities there.
Correct. Dhananjay, the question really at this point is that are you asking your clients to play defensive, or are you actually asking your clients to go ahead and start nibbling into stocks in which you think that the long-term prospects are really good, relatively much better?
So I am trying to nibble into a sort of a counter-cyclical sort of contra market bet, wherein I am looking at an improved scenario over the next 2 years, and a lot of stress that has been there, that the market perceives that are currently there, that is actually reflecting in the prices. So I think the reason why I went overweight on the consumer names is largely because people thought the rural demand is weak and hence cash crunch is there, and the auto demand is weak. all those kind of stuff that is there. So I think we have to really look at some of these stocks and start looking at 2 years perspective. For instance, in autos, one can a safe bet could be Maruti, for instance. I mean, with respect to two-wheelers, you have BS6 concerns that are panning out over the next couple of quarters. So those concerns will keep on bogging that space. But within the auto space, one can look at passenger cars, wherein the proportion of the impact of BS6 is going to be lesser. So that's another area one can look at a contra call. And I would say the other thing is one can also sort of start nibbling into some of the sort of commodity cyclicals, because if there are any chance of dissipation of trade conflicts arise over the next 1 month, especially in October, I think there should be opportunity there as well.